Hello and welcome to Startup Street. I'm Arundathi and with me as always Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. Dunzo lays off 150 to 200 people in the latest round of layoffs. It's third as the company continues to grapple with huge cash pressures. The platform also gets a legal notice from Facebook over non-payment of dues. Sources tell CNBC TV18 this comes after Google, Dunzo's second largest backer, also issued a legal notice to the quick commerce platform asking to clear unpaid dues.
AI tech support startup Sarthi.ai has fired some employees buckling under investor pressure to become profitable and has allegedly withheld salaries of several employees since March 2023. We had to automate low-level professional cognitive skills of our staff due to investor pressure to become profitable, said founder and CEO Vishwanath Jha.
A group of 30 Indian and foreign investors have written to PM Modi saying that the current proposal of imposing 28% GST on full face value of online gaming transactions will set up the most onerous tax regime for the gaming sector globally, which will lead to a potential write-off of the $2.5 billion capital invested in the sector.
Ati Motors, maker of autonomous industrial robots, raises $10.85 million in Series A round led by True Ventures. Atira Venture Partners joined as a new investor, while existing investors, Bloom Ventures, Xfinity Ventures and MFV Partners also participated in the round.
Swiggy is building a generative AI-led solutions for its ecosystem of restaurants and delivery partners that will help in cutting down total operational cost. The company's neural search will offer personalized recommendations by understanding users' conversational and open-ended queries, it said in a blog post.
Twitter to take on LinkedIn with job posting feature. The microblogging platform is working on a job posting feature that will allow verified organizations to post job listings on their profiles. The company created an account at @Twitter hiring on platform.
Those were the headlines that we're tracking for you this evening. But on What's Brewing today, CNBC TV18 has learned that cash-strapped quick commerce platform Dunzo has laid off 150 to 200 people in the latest round of layoffs. Sources also tell CNBC TV18 that the platform also received a legal notice from Facebook India over non-payment of dues. Now, this comes after Google, Dunzo's second largest backer, also issued a legal notice to the quick commerce platform asking to clear unpaid dues. Aishwarya Anand is here with more. Aishwarya, what are you picking up?
That's right. Dunzo, which is facing a severe cash crunch, has begun fresh layoffs. We understand that 150 to 200 employees have been impacted in the recent round of job cuts. An affected employee told CNBC TV18 that she received a call from senior management informing her that Dunzo is letting go of certain employees as the business is not doing well. Now, this employee also told CNBC TV18 that she needs to serve 2 months notice period and her dues will only be cleared post that. Remember, this is the company's third round of layoffs within the last 7 months as the company faces mounting troubles when it comes to cash flow. This also comes in a day after we reported salary delays at the platform. Now, salaries that were originally due in June have been delayed further due to the cash crunch. The company had also capped the salaries of employees at Rs 75,000 in June. CNBC TV18 has also learned that Dunzo has been served legal notice by tech giants Meta and Google. Facebook India Online Services Private Limited and Nilenso, a software consultancy firm, have served legal notice to Dunzo over non-payment of dues. This comes after Google, which is Dunzo's second largest backer, has also issued a legal notice to Dunzo asking the startup to clear unpaid dues. Remember, of the $75 million that Dunzo had raised in April, only about $45 million has come through. The grocery delivery platform is now looking at Reliance Retail, one of its biggest shareholders, for a $20 million lifeline. The quick commerce platform has shut down close to 70% of its dark stores. Back to you.
Aishwarya, for those details. Appreciate you joining us. Moving on, Bollywood star Alia Bhatt has invested in sustainable baby and mom care brand SuperBottoms, an online-first sustainable brand of reusable cloth diapers and baby products. SuperBottoms aims to increase awareness and adoption of reusable cloth diapers in India. To talk to us about this funding and the growth ahead of this guilt-free diapering brand, I'm now joined by Pallavi Utagi founder and CEO of SuperBottoms. Pallavi, welcome to Startup Street. Now, before we get into the business and the funding aspects of the platform, talk to us about the genesis of the idea. You have hit a double win, a sustainable product plus one that solves some very important issues for parents with young children. So tell us, how did this come about?
Hi, Shruti. Firstly, thank you for having me on this platform. And so, Shruti, as they say, necessity is the mother of invention. And in my case, I was simply very, very desperate and looking for a solution for my baby, which was skin-friendly as well as kind on the planet. I was very, very clear that no sustainable product will be adopted at mass if it does not solve a genuine problem and it is convenient. So the entire research started to lead me to a cloth diaper which was high performance and did not sit in the landfill for years together. So every disposable diaper actually takes 500 years to biodegrade, and every baby uses about 5,000 disposable diapers in his or her lifetime. So the amount of plastic waste that would have generated if I would have continued using the diapers gave me a lot of nightmares. And I think the entire research led me to developing SuperBottoms as we know of it today.
Okay, all right. Now, Alia Bhatt joins the company as ambassador and investor. So firstly, tell me, how much money have you raised in this round and how much has Alia put in? And where do you plan to use the new funds, and how much have you raised via VC funding since the inception in 2018?
So, Shruti, since inception, we have raised close to 40 crore. And, more than the money, it was a collaboration of like-minded entrepreneurs who were very keen on making products which were really good for babies and also safe for the planet. So, and with the new funds that we have raised, the entire focus for us will be marketing and brand awareness, because we feel that we have a great product, and the moment parents come to know that they have an option between the very inconvenient traditional langot and plasticky rash-giving disposable diapers, they want to try SuperBottoms, right? But at the same time, they are not aware. So most of the funds that we have raised will go in generating awareness about the brand. And also, we are the absolute leaders in this space. So the entire onus of building the category awareness lies completely upon us. So that is the entire focus, to take SuperBottoms to more and more parents in India. And with Alia's a superstar like Alia backing us, it will give us a lot of strength and boost and build a lot of credibility for the brand and category.
All right, Pallavi, you haven't disclosed the amount. Moving on from there then. What were the conversations with Alia like? As a new mom, her connection to the product must have been instant. And, as an investor, what was it like working with her?
So, it was almost like connection at first sight. When we met her, the first thing she told us was that she was using our newborn Uno and another product of ours called Dry Feel Langot. And it was a great feeling, of course. And the very fact that Alia is herself very, very conscious about her choices and is very vocal about sustainable living was a huge plus. So we connected not just as parents, but we discussed a lot of things around what is happening in the baby care industry. How do we make sure that we leave a healthier planet for our future generations? And, as an investor, she is a person who, one, believes in very strong stories. So if you see that all the investments that she have made till now are about investing in the story and more than the product. And secondly, she, of course, is someone who puts planet before the profits. And that is where we connected. And I think that's where we really thought that she was someone who could go well with our brand and our story.
All right. Pallavi, let's quickly now talk a bit about your product line. Could you take us through the portfolio and what the top selling products are?
Sure, Shruti. So our product portfolio starts as the baby is born, and we have products right from the day the baby is born, which is our langot, moving on to our hero product, which is SuperBottoms Uno, which is a reusable cloth diaper that performs just like disposable, giving babies dry feel, complete waterproofing, and performs up to 12 hours, but is washable and reusable, therefore very, very kind on the planet. And then as babies grow, they typically move to potty training, and that is why we have a product called potty training pants. And now we are gradually moving to underwear, because we see that as kids grow, they eventually move to underwear, and there are no good kids underwear brands in India. Most of the brands are miniature adult underwears, and that's the portfolio that we have.
All right. So quickly give us a sense of your sales as well and the top markets, what kind of SKUs you have presently, and what's the retail strategy going forward?
So in terms of our revenue, we are clocking somewhere close to 75 to 80 crore in terms of run rate. And our top markets are West and South India. However, we are seeing a lot of traction coming in from Delhi as well. But primarily, we have been online till now. We have focused on building our brand online. Going ahead, we are going offline very aggressively. We are building a team to do that. We are present in about 70 to 80 stores, but we are focusing on going beyond. We have also launched our first kiosk store in Mumbai, and is doing pretty well. And so we will be expanding on two fronts. One is the baby trade, and two, it will be a series of kiosk stores, and which will actually give parents an opportunity to touch and feel the product before they actually order it, because that being a new product, that is very important for us, for the parents as well.
Pallavi, any revenue targets that you've set for yourself, and also the kind of innovation we can expect going forward?
So, Shruti, innovation has been the core for SuperBottoms, because the product itself is innovative. We have filed a patent on it, and we keep on working on that. So yes, there will be innovation on it, because our entire vision is to make cloth diapering mainstream in India. As such, in terms of numbers, of course, there are certain number targets. We want to hit 100 crore run rate mark very soon. However, our main vision as a brand is to take cloth diaper to every parent in India. I feel it's a great concept, great product. It's just that we need to take it to more and more parents. So we will continue to innovate on that front as well, and work on bringing more products to babies in India. We feel that the baby products can.
Pallavi, we've completely run out of time.
In India, apart from personal care.
All right, we've run out of time, but many thanks for joining us on Startup Street, and wish you the very best in all your growth plans.
Thank you, Shruti. Thank you. Bye-bye.
All right, Pallavi was just telling us about her hybrid model, but she isn't the only one. Now we have EdTech unicorn Lead School, which is looking to foray into the 1 lakh plus low-fee school segment in India and aims to serve over 25 million students across 60,000 schools in the next 5 years. The EdTech company reported revenues of 142 crores in FY22, even as its losses tripled to 397 crores in the year compared to the previous year. Joining me now to talk about this latest business foray and what that would mean for the company is its co-founder and CEO, Sumeet Mehta. Also joining me from Mumbai is my colleague, Arundathi. Sumeet, welcome to Startup Street. Thank you for your time here. If you could start by telling us about your decision to foray into this segment and how you expect this to add to your revenue growth and the strategic importance of the low-fee school segment that's going to be.
Thanks, Ritu, for having me here. As you know, India lives in Bharat, and we have 4.5 lakh private schools, but 3 lakh of them are below the 15,000 annual fee mark. And survey after survey has said that these are the set of schools which have been left out of the purview of most school edtech companies because of affordability. So we've been studying the needs of this segment of schools for the last 5 years, and we've now designed an innovative smart school system that upgrades all these low-fee schools so that their students can also have access to good curriculum and audiovisual learning. And I think our objective, if you recall, mission has always been excellent education for every child. So we were clear that if we are not serving these schools, we will actually not be fulfilling our mission. To answer your second question, in the long term, we see that almost half our business will now start to come from this segment, because this is the largest school segment in the country.
All right. Hi, Sumeet. Arundathi here. You said half your business will start coming from this segment. So how much market share do you think you can capture in the low-fee school segment across these 1 lakh plus schools? How many such schools are you targeting to sign up in this segment in around, let's say, a year or so?
Yeah, see, I think if you look at worldwide, most educationally developed markets like US or Brazil, digitization of schools has already reached close to 80%. And the market leader typically has a 30% share. India, unfortunately, in these low-fee segments is less than 1% penetration. So we want to break the affordability barrier and take audiovisual learning to the large segment of schools. There are about 3 lakh of them. I think in the long term, we will gain a market share of close to 25% here. In the immediate period, like you said, for the next 12 months, we are aiming to sign over 1,000 schools in the low-fee segment.
All right, 1,000 out of 1 lakh schools you will sign in the next year. But Sumeet, let's talk about your revenues as well. Those have doubled, sure, but so have the losses. Actually, they've tripled. Tell us what levers you're putting in place to course correct and achieve profitability, which you aim to do by 2024.
Yeah, Ritu, I think that's an excellent question. See, education in India, to build a full-fledged K-12 stack is a very expensive proposition. So when we began our journey to partner with schools in 2018, we were clear that at a scale of 4 to 5,000 partner schools, we'll become EBITDA positive. That would happen by FY25. So despite the 2 years of COVID, which set our plans a little back, we are on track. We're growing twice year on year. This year in FY23, again, we'll grow 2x. And we are on track to become EBITDA positive by FY25. So I think the company stays on track to its original business plan despite COVID-led disruptions.
All right, so on track with your plans there. But Sumeet, it has been tough times. So last year you had to let go of about 100 employees. Have things stabilized since then? What are your hiring plans for the year, if any?
Yeah, I think last year was tough for everyone in education because we had to readjust to the post-COVID reality. I mean, school edtech was less affected. People like us were less affected. People who were selling directly to students online were more affected. We were aiming to grow 3x, but we grew 2x. Now, I think if I look forward with the low-fee school segment opening up for us, we are looking at growing our current base of affordable schools and adding, like I said, 1,000 odd low-fee schools also in the coming year. And if you see, Lead has actually become the training ground for a lot of education companies in the market. So we hire at the entry level. We continue to hire at the entry level in academics, school excellence, and sales. And then we have adopted a very conscious strategy of promoting people from within.
So, Sumeet, what is this post-pandemic trend that you're seeing when we talk about demand? I mean, we know, of course, schools are reopening. Hybrid models are not as prevalent as they were immediately after the pandemic. So how many schools are you able to sign on a monthly basis? What is your target overall? You said about 1,000 for the low-fee schools, but on an annual basis as well, overall, how many schools can you sign?
Yeah, I think the three parts to your question. Post-COVID, what we really saw was that schools came back into vogue. I mean, I was surprised during COVID, people were writing off the obituary of schools saying learning will move online. Thankfully, as we predicted, it hasn't happened. But schools are limping back to normalcy. A lot of them lost admissions because people went to their villages and people really stopped paying fees to schools. The last year has been a year of transition. A lot of schools had stressed balance sheets. Now, when we work with schools, we are seeing, especially in the April, May, June quarter, as the new academic year has begun, schools are now coming back to normalcy. So that basically means that the focus is shifting from survival to innovation, which actually is what we as a school edtech company drive. So what we're looking at is that overall, I think we will add about 1,500 to 2,000 schools in this coming year also. By far, we are the largest school edtech company. In a year, the number of schools we sign would be equal to all other companies put together and then some more. And I think we want to continue that trend.
All right, so you're looking to add 1,500, 2,000 schools this year. All right, Sumeet, we're completely out of time, but thank you so much for joining us on Startup Street today.
Thanks for having me here.
With that, it's time for us to quickly head into a short break. But coming up, generative AI is the talk of the town. But what are the challenges with models like ChatGPT? A special discussion with Sridhar Vembu of Zoho Corp next.
Welcome back. You're watching Startup Street. Now, large language models may have a truth problem. That's the word coming in from Zoho's co-founder and CEO, Sridhar Vembu. In a candid chat with CNBC TV18's Jude Sannith, the Zoho boss said that over 15% of the company's employees have stopped using ChatGPT, even as the company is building a language model of its own. Here's a slice of that conversation.
We're having this discourse, and I find it very interesting because it's also coming at a time when the chinks are beginning to show with regard to conversational AI, or for that matter, generative AI itself. So when you're talking on one side about AI, or redefining or replacing roles, do you essentially see it as a formidable force to reckon with in the first place, given that there are errors? ChatGPT is being challenged more often now than before in terms of accuracy. Is that a problematic point when it comes to any discourse or use of AI itself?
Definitely. So we have to have, in the business context or any real world context, we have to have tools that we can rely on. Truth, of course, is very important, which is why Elon Musk talks about truth GPT. And today, this LLM technology still has that problem, where we cannot rely on it, absolutely. And in fact, I quoted evidence now that is emerging where the thing is very unreliable in terms of its ups and downs, in terms of accuracy. And that we cannot have in any business context. there is some fundamental research problems there. So this is not a solved problem by any means, but it also calls for then humility. That we cannot just say that all these problems are solved. We have to be working on it, and so that is why I think that the rollout will be very guarded. And there are areas where we can immediately use the technology, but there are areas where we have to be careful. To me, the most immediate low-hanging fruit will be the programming sector, where we can make the programmer much more productive.
Right.
That I believe is a low-hanging fruit that can be done. But other areas we have to be, I think the rollout will be slower in my opinion. And the image recognition, image processing, quality, all of that we talked about.
Yeah.
Those areas, for example, inspecting parts, understanding whether some room has been fixed in a hotel, for example, those AI can be very helpful.
Yeah.
And we talked about parking lot automation, where the cameras help you identify whether parking slots are open. And you take the camera image and tell where the open slots are. AI is very useful there.
Right.
So a lot of this technology can be immediately put to use in areas where these concerns don't arise.
Right, and figuring out the difference between the low-hanging fruits and the potential areas where more work needs to be done is relevant to this discourse, no doubt.
Yes.
But given the ups and downs that you just spoke about, I have to ask you: do you use generative AI? What do you use it for?
Definitely, my usage has dropped over time, and simply because as I find it, and I think many other people say it too, I find sometimes the tool lectures you, right? It's in the areas I talk about, I want an alternative opinion, but you find that it will give you like this, it gives you a median of what is conventional wisdom. But a lot of times in business, you don't just go by conventional wisdom. You need alternative points of view. And when you talk about this, when you push the AI there, it starts lecturing you.
Right.
That's what I found out personally.
Yeah. And you also made a very interesting point where you said, I think 15% of your employees, at least whom you checked with, hadn't used a conversational generative AI tool.
No, 8% had not used
it, but 30%, I believe, had reduced their usage.
Yeah.
Is that telling when it comes to processes at tech companies that employ generative AI itself? And is that perhaps
I don't want to read too much into it. We ran a survey, about 8,000 of our people participated, where we found that about 50% use it regularly, 52%. Another about 30 or so percent started using it, but their usage have reduced to more occasional use. And about 15% have stopped using it, and 8% haven't tried, or something like that. I remember these numbers. But the key here is that why the usage is reduced in this cohort. I myself am in that 30% where the usage reduced over time. That's what we want to understand, why it is reduced. At least my personally speaking, why for me is, on the areas I know about where I want a good debating partner, let's say, or somebody who will explore an area, it starts lecturing you on conventional wisdom. So that's where the problem is.
Right. And yet, even as these debates rage on, Zoho itself is developing its own LLM to rival OpenAI and Google is what we read.
No, again, see, these are longer term.
I know there's not much you can talk about it, but would this then be in a position to, close these chinks that you've experienced in traditional existing LLM models?
It'd be too arrogant to say we can close these things. These are very open R&D problems. We are working on those problems, but with any of these cutting-edge R&D, you cannot predict the results. And we cannot even predict the timelines. So we are just working on it. I am actually personally working on some of those problems.
What's the intention, Sridhar? Are you hoping to take on the biggies in this space?
We are trying to declare our technology independence.
Okay.
I'm going to put it that way.
All right. And being independent on that front is a passion project of yours.
Exactly.
So Zoho pointing out some accuracy issues there with generative AI language models. But it is Friday and it's time to take stock of all the deals from the startup world. According to Venture Intelligence, this week saw a total of 14 deals worth $148 million. Let's take a look at some of the notable ones. DNA-based career guidance startup GenLeap backed $50 million from Gem Global, while Gurugram-based insurtech startup Renewbuy raised $40 million as a part of Series D round from Daiichi Life Holdings. Meanwhile, truck aggregator Let's Transport got $25 million from Bertelsmann India Investments and others. And that's not all. D2C footwear brand Soul Threads got a little over $7 million as a part of a Series A round from Fireside Ventures, DSG Consumer Partners and Sama Capital. While revenue-based financing firm Efficient Capital raised $7 million from QED investors, Loma Ventures and others. According to Venture Intelligence, this year has seen 332 deals worth $4.14 billion.
Well, with that, it's a wrap on this edition of Startup Straight. Many thanks for watching. It's a goodbye from Ritu, Arundathi and me, Shruti. More news and updates coming up on the other side. Stay tuned.